Hello, and welcome to the CFA Society San Francisco podcast, where we interview and discuss current topics with leading members of the Bay Area investment community. This week, Tanya Subatang, Senior Membership Manager with CFA Society San Francisco, sits down with John Ailanjian, CFA, Partner and CIO for Next Play Capital. Listen in as they discuss tech innovations and its impact on global markets, staying afloat through market shockwaves, and venture as an asset class.
Good morning, John. Thank you for being on our show today. How are you?
Good morning, Tanya. I'm doing great.
I am very excited for our conversation because you're going to be bringing a couple of insights that I know everybody's going to want to hear. So jumping right into it, I'd love for you to share with us a little bit more about yourself and how you got into the finance and investment industry.
Okay, wow. Well, that's not a clear path, but I'll do my best. Yeah, I grew up in the Bay Area. My family moved here in 1975 from Istanbul, Turkey. I have a twin sister, Rose. We were 3 years old at the time when we moved here. And so we were, that American dream family. We came here with really not a lot and had an opportunity to be able to build something. My parents bought a dry cleaning business. That kind of became our second home. I went to, Serra High School. My sister went to Notre Dame. So the boy-girl kind of brother-sister schools. And, they provided a great life for us. And when we were young, a lot of our time was spent, working in the shop when my parents were on vacation, and, they would send us on vacation so we could go do things separately. But, how I got into finance, maybe getting into that, and I can tell you more about the other stuff at a different time, but how I got into finance was really surprising. As you can imagine, as an immigrant family, your parents really want you to become a doctor, a lawyer, an accountant, right? And so when I was applying to school, I was a pre-med. And part of the reason why I was in pre-med is during my high school years, I was a Boy Scout. And then through the Boy Scouts, I ended up becoming a junior EMT. And that allowed me the opportunity to go into, riding ambulances at night. And for 2 years, really got to see some incredible things, good and bad, that influenced me and had a big influence on my life. And so I found that I wasn't traumatized by blood and I wasn't traumatized by the things that I could see. And so I thought, well, this could be a very interesting profession for me. And I was good at math and science. And so it seemed like a natural place to go. And so initially I was a pre-med student, spent the first 2 years taking, biology and chemistry and all the different courses, and realized pretty quickly that part of the reason why I wanted to go into medicine was because I wanted to own my own business. I wanted to have my own practice and I wanted to build a business attached to that. And so when I was going through the courses and how challenging it was, and then I'd have some, economic classes as well that were a lot easier, I found that I resonated in that direction more. And so I thought my junior year, maybe I should go get a job in finance and figure out what that's all about. So I went to the job board and picked out a job. And there was one at a brokerage house called Dean Witter Reynolds at the time. Many people probably don't even know that name, but it was in Beverly Hills. And so I went, and there was this, young broker who was wearing suspenders and gave me a thick book about this thick with a bunch of names and phone numbers, and said, all right, son, here's the text. We'll go ahead and start cold calling. And this is the script that you're going to use, and go and call. And Tanya, it was a miserable experience. I mean, call people, and they were, either had passed away or the wife was upset because, she had managed the money and I asked for the husband, and, they wondered where I got their phone number from. So, and I was doing this for free. It was just a non-paid internship. And so I went back to the job board and ended up looking for a job that paid the highest amount. I said, I'm not going to do this again. If it's going to be miserable, at least I'll make some money. And there was a job paying $9 an hour at the time at a fixed income asset management shop in Century City. And so I went and interviewed and ultimately got the job there and worked there through my, end of my junior year and senior year in college, and then was offered an opportunity to go work on their trading desk when I graduated. And so that's really how I ended up getting into finance. And, from that, I, ended up moving to New York, worked at Goldman for about 12 years, and then ultimately went and ran a multifamily office.
Wow. I mean, that's a pretty significant switch. I'm curious, did your parents understand the switch, or were they kind of like, I don't understand this field, or were they extremely supportive?
It's funny you asked that question. I think to this day, they don't really know what I do for a living. I would come back and tell them the things I would do, and it was just so foreign. I mean, you have to understand that, they weren't investors in stocks. They, mainly liked real estate, which you can imagine, real hard assets. I think that, the part about switching from medical, my parents were always very supportive of all of our decisions. And so that wasn't as big of a shock to them. I don't think they came with since they weren't doctors themselves, they realized that, you have to go where where, your opportunities lie and where you have your passion. But yeah, to this day, I really don't think, even my mom, when I talk to her daily, she's like, oh, I hope things are well. So the market's up and down. Are you okay? And that's all she ever really asks me. I really have a sense of what I do day to day.
Oh gosh. I mean, you got to appreciate that the blind support that they're probably providing you, not understanding it, but still going, okay, I don't get it, but I will support you. So gotta love our parents for that.
Exactly.
So, I mean, for our listeners who are not familiar with who you are, you actually work for Next Play Capital and you are a partner there. Can you tell us a little bit more about the company and your role?
Yeah, of course. So Next Play, I think the best way to describe it is a venture platform. It was founded in 2015 by a gentleman named Ryan Neese. Ryan had played professional football in the NFL, won a Super Bowl with the Tampa Bay Buccaneers. His father is a well-known San Francisco 49er and Hall of Famer by the name of Ronnie Lott. And when Ryan was retiring from the sport, he really had this vision of trying to build this, platform and provide for the community they serve and this community of, athletes and influencers, et cetera, a way to get institutional access to the venture asset class.
Mm-hmm.
And the reason for that is because they witnessed so much adverse selection that was occurring in the locker room. And they felt that they could, really kind of use the community and use their relationships and networks to be able to provide a much better way for these people to get access to the venture asset class. Mm-hmm. And so realizing pretty quickly that they weren't going to become managers themselves, but they could partner with some of the best investors in the world. And so the first product was really kind of a fund to fund. So it was going out and building relationships with some of the top VC funds and partners in those funds to be able to get access. And so that started in 2015. First fund was turned out to be, very successful. Went out in 2018 to raise the second fund, and that's really when I joined the firm. Mm-hmm. I met Ryan right around when they were launching Next Play. I was running this family office. It wasn't really I would say it was a multifamily office, but my real task was to source diligence and bring to the table alternatives. And so it would be venture capital, private equity, and real estate for the most part. And when I would fly back and forth to the Bay Area, I'd run into the Next Play team and to Ryan. And we always used to joke because I'd say, your business is a lot like an outsourced family office. You guys go and invest in try and get into access to some of the best funds, right, and then use those funds to then hopefully invest in some companies that they're investing alongside of them. I said, the only difference is you're getting into better funds than I am. And so I got to figure out how to be able to do that. And so in 2016, we ended up moving the office back to the Bay Area from New York, partly because it was a big strain on my family. At the time I was now married, we had 3 kids, and I was flying back and forth pretty much every week to try and source different deals here in the Valley. And at that time, Ryan kept saying, when are you be interested in come joining us? Why don't you come and help us build out the platform? And so finally by 2018, I did end up joining, and, fortunate for me, it's been an incredible experience, but we were able to, take our fund 2 that we created in 2018, and then also wanted to really build out the direct exposure. And so we spent from 2018 to 2020 really trying to prove to the community that we could source and diligence and invest in some of the best companies in the world. And so we did about 18 companies over the course of those 2 years, and it gave us the right to be able to then raise our first dedicated direct fund as well. And so the reason I say it's a platform is we have a fund-to-fund product, we have our direct product, we now have an emerging leaders product as well. And so that becomes kind of the core of what Next Play is. The other thing that's very important to us, and I just want to kind of mention it here, is that we pride ourselves on education. So one of the reasons what this firm was built was around trying to serve that community, like I mentioned to you earlier. And part serving is being able to provide access to the best companies and the best investment opportunities, but also to help them learn how to understand the asset class. And so we host about 25 to 30 events a year. Wow. We have, tech tours where we take a group of athletes and also LPs to go meet with partners and with entrepreneurs to sit down and learn about it. I run a fellowship program. I bring 20 athletes in for 2 weeks to spend with me to learn about how to invest in venture. And then ultimately it ends with them giving a presentation on a company. We have an internship program. We bring 6 to 8 college students to come spend the summer with us to learn about venture as an asset class. And then we host our Bridge Summit, which is our big annual event, as well as a variety of other events throughout the course of the year.
Wow. I mean, that's amazing. And I want to clarify, your clientele is not just athletes, but emerging social media influencers. Am I right on that?
So, it's funny. We have such a broad base and everyone, kind of views us from that lens. The reality of it is it's a typical 80-20 rule. So I would say 80% by numbers is this diversity among athletes, influencers, team owners, et cetera. And then, but they make up about 20% of the dollars. And then the other 80% of the dollars comes from traditional institutional investors. So we have endowments, we have consultants, we have RIA community, we have high net worth individuals and whatnot.
Yeah, but like looking at the 20% pool that you have, did you think, very early on in your career, let's take it like 10, 15 years ago, that you would say, oh, some of my clientele are influencers and athletes, probably not as high as you probably have now, right? That's probably a big change.
No, that's very true. I mean, look, it's clear that community has become a lot greater and has a lot more influence, and social media has played a major role in that. But what I think is very interesting is when I first joined, I didn't quite understand the value proposition that they provided. If you think about what NextPlay is, we're a very unique community. It's a community that probably looks very different than any other room that you would walk into in the venture landscape, right? It's just different. That being said, I thought in the beginning that it was, part of the flywheel is using that community to be able to get access to the best GPs to invest in, the best funds to invest in. And you can imagine there's, every one of the partners at those places probably played sports and has some kind of an interest in a type A type personality. And some of these guys are there, the heroes they grew up with. And so I always thought of it as kind of fulfilling that portion of the flywheel, the access portion. What I didn't fully appreciate was that, they can be so beneficial into businesses as well. And so when we invest in a company, a lot of times I will bring this community because it will help with consumer. It's pretty easy, right? You can kind of get a sense that we can help with branding, marketing, maybe even influencing. With the enterprise software side or with the fintech side, it becomes a little bit less clear. But what we found is that, a lot of times these organizations are scaling very quickly and they have a lot of sales and marketing teams that, did play sports and that did have heroes in their local areas. And so the power of being able to bring our community to an event that they're doing and really kind of, help change the mood and bring some encouragement and courage and everything else to them has been really powerful. And then on the leadership side, you have to understand athletes have gone through a lot of, they've gone through a lot in their careers. They go through a lot in the game. There's a lot with regards to diversity, dealing with difficult situations. There's a lot with how to deal with, people constantly trying to take your job or people constantly attacking you at various points. And so being able to have them speak with the entrepreneurs and the founders to realize how they can benefit from these times of adversity has been very powerful as well.
I've never thought of it that way. What a very insightful and amazing kind of partnership. Like you're right. Athletes have this kind of competitive and in a different perspective, you think about it as a business sense, because they do have to protect their assets and their jobs because it's always getting attacked, right? There's always that junior person coming in who's faster and stronger and quicker. And it is, right? The athletic side of it, everybody usually, what do they say? Like 30s is they peak out. And for some of us in like the business world, like 30s when we peak. It's like when you start getting the network and everything. So wow, I never thought about that. That's what a great combination to have those two kind of combine.
Tanya, one thing I'll add there, and we just are incubating a new company called NextPlay University. And the reason why it's being created is because I told you core to us is education, core to us is trying to help that community in different ways.
Right.
One thing that's so sad is you have athletes and you think about professional careers that last maybe 3 to 5 years, ballpark on average, right?
If you're not injured and
if you're not injured,
top shape, yeah.
Exactly. And now you've spent your whole career and your whole life training, becoming the top of the game. You've always been told you're the best. You've always excelled above everybody else that you're in. And now all of a sudden you're going to go into the workplace and you don't know where to go.
Yeah.
And you don't know where to begin. And you're going to probably have to answer to someone that's, 5 to 10 years senior to where you are in your life, just from an age perspective. And so the purpose of NextPlay U was really around that transition to help these athletes understand that, there are certain skills that you guys have that are that will transfer very well into the workplace. And so let's find what those are for you. And then let's find companies that are looking for that diversity inside of their workforce and connect those two groups. And so, it's very dear to us, but to your point, it's, there's a lot of ways that we can add value in the way that we can provide help. And I think that as we think about that community. We always think about it from what we see on, Saturday or Sunday on the TV screen, but we don't think about it from what happens after that.
Yeah, that's a great. I would love to see how that develops, and hopefully you'll come back and tell us a little bit more as it piloted and years down the line. I want to kind of take a little step back because you had talked about diversity and in your clientele, but you also have a very extremely diverse team, and your Next Place team is not just diverse. I want to emphasize this in gender and ethnicity, but as we talked about in profession, you have people in your team that come from the sports world and others. So I want to know, and I'm sure others listening, like how has that benefited the company? And I think you spoke a little bit about that. And was that intentional, or would that just kind of happen naturally because of what Next Place is trying to accomplish?
Yeah, it was clearly not intentional. I mean, I think, if you think of the genesis of the firm, it was, started based on that. But if, what we found is that we don't think about diversity probably the way that a lot of people do. For us, it's just a natural thing.
Mm-hmm.
Our community ends up becoming more diverse because of the people that we associate with and the people that we surround ourselves with. And so, clearly the headlines have talked a lot about what's happened in our profession, in the venture world, around, the lack of diversity, to be honest. And, it's been hard. We've taught a lot about, well, do we go raise a, D&I fund or an ESG fund or other things? And we thought it's not core to Next Play. We don't think that way. Everything we do is already incorporated in that. So it's we found that it's been beneficial to us, with the flywheel effect that I mentioned earlier, just because of the benefits that we can add to some of the companies and the GPs and others in the community. Mm-hmm. But that's not the reason we did it. We did it because those are the people that we associate with. This is the community that we have, not only built for ourselves, but has been built for us as we've just kind of continued to grow. And so, our value is, even when I think about our workforce, I mean, we have over 50% of our employees are, some come from minority background or from female, right? We have the athletes and residents that work with us that spend their time trying to, source and diligence different companies. We have, just the people that we think are great at what they do and that are able to bring a different perspective. That's what we're focused on. And quite frankly, that's what venture is about, right? You're always trying to find those things that are a little bit different. You're trying to think about things outside the box that could potentially become, massive disruptors and huge outliers, if you will. And so we feel like that allows us the edge to be able to see things that others may not be looking at.
And you're really taking that to the next level, in my opinion, because you're not, again, just selecting people or organically hiring people based on their ethnicity or their gender or their background, how they grew up, but you really are like, you're an expert in this field. I think you're going to bring a different perspective. I mean, that's really expanding your bubble, and that's amazing.
Yeah, thank you. Yeah, we don't see it. We don't look at it that way. Honestly, we look at it based on just the person, the people, and what our needs are. But it doesn't have to do with race or gender or sex or anything like that. It really just has to do with the most qualified.
I love that. So earlier you were talking about you guys had an internship program, and you have, obviously venture capital is still kind of that sector that there's a lot of people that would like to get in there, but also trying to figure out how to get themselves in there. And especially what's happening right now in the workforce, we know, there's a couple of layoffs, and I'm sure there's going to be a lot of people wanting to pivot and change direction to where they currently are. What advice would you give someone who's looking into getting into venture capital, and, what steps should they be taking? And is there anything that unique they should be doing?
Yeah, it's a good question. And I don't think there's no straightforward path. And I'll tell you why I say that. In traditional finance, if you want to go and become an asset manager, or you want to go become a hedge fund manager, or you want to work in corporate finance, there's a path, right? You can go to school, you can study economics, you can then go to maybe business school, you can go work at an investment bank for a couple of years and get trained. There's a clear path to how you can, build this toolbox, if you will, that will be able to help you succeed in those careers, or at least find access to get into those careers and maybe find success. With venture, it's very different. One of the things that really opened my eyes when I moved over from traditional finance into venture was that the fact that I worked at Goldman, or the fact that I had all these years in traditional finance, really didn't matter. It didn't resonate with the venture community. And the reason is because I looked around, and all of the top partners were operators. They had either started companies, or they had worked at, Google, or they worked at, some of these other earlier, tech giants that were built, and Microsoft. And sure enough, it was a very different mindset, especially at the early stages, because, when you think about what we learn in traditional finance, it's about risk management. It's about portfolio construction. It's about, reducing volatility. Well, that all goes out the window when you think about venture, especially at the early stage. I mean, you don't have any numbers. You don't have anything you're just trying to identify whether this person is somebody. I think that if this idea is a big enough idea, and I have some domain knowledge in that, and so I can at least feel like I can make some, knowledgeable predictions around that. And then B, is the person someone that I think will be able to execute and take this company to that next level? And if they can't, will they be able to pivot? Totally different. So going back to your question about how do I advise, the young kids that come work with us, and quite frankly, even my kids, is there's two routes you can take. One is, yes, you can probably go into some funds and become a junior analyst and try and work your way up that fund. Mm-hmm. Maybe if that works, then you can, and the way you're going to get in will be challenging because there's less of them, right? Just traditionally. And then hopefully maybe they'll put you in as an operator inside one of their portfolio companies, and you'll get operating experience, and then they'll pull you back out and you'll become an investor in that sector that you operated in. The other angle is actually go work for a tech company. Learn what it means to be a founder, learn what it means to be a startup, learn maybe if it's a bigger company, what it takes to be able to get to scale, and what are the best practices in these giants that allow them to be able to operate at the kind of level that they are, and what are some of the mistakes that other firms make and not being able to get there, so that when you do become an investor in the field, you can look at it through the lens of, what an operator would need, what are the things they want, and then how do I scale a company, and what are the mistakes that I want to try and avoid in doing so.
I want to ask you this question because, earlier in our comment, you worked as EMT junior and you said nothing phases me. And I'm sure driving in that ambulance, there's a sense of adrenaline, right? And being able to stomach literally any sort of changes and emergency. I feel like that attribute has worked for you well working in venture capital, because when you're talking about startup in a technology company, nothing is more adrenaline rush. And I'm sure a lot of being able to pivot, think on your feet kind of falls into that. Am I wrong?
No, it's true. I mean, you're having to, and especially in the last couple of years, and, unlike in Publix, where you have, a lot of information that you can work on in order to be able to make a decision. A lot of times here, you're just triangulating, right? Mm-hmm. There's not a lot of information. You're just triangulating around what market opportunities look like, what, about these founders, what about the other investors that have invested into the company. And then, a little bit of your own feeling and experience and seeing a bunch of these things. I always laugh. I always see a founder, and the first time you look, and, I tell everyone the same thing. There's never a pitch book I didn't love, right? Everyone comes to your office and they say, of course, they come in your office. They're excited about the opportunity. They're willing to share with you, this enthusiasm and this energy. And you think about what they're trying to, change the world. And you're like, wow, this is amazing. Of course it's amazing, but after you go to see hundreds of these, you start to realize that, we can't invest in all of them clearly. Mm-hmm. And some of them are, and when you first start, you don't know the difference, but some of them are, maybe not as unique and differentiated as you think. And so I always laugh when our juniors come and they say, the question that I always ask when we have a meeting is, who else is doing what you're doing? Mm. And inherently, it's always the same answer, which is, there's others in the space that are doing, but no one does it quite like we do. But after you've seen hundreds of these, you're like, I just had 3 or 4 other companies come through that were doing something very similar. So, it seems like, there's having this, ability to how should I say it? This business is a lot about, the number of things you can see and this like memory that you build from being able to, have multiple different companies come to you that you can observe. And so you slowly start to identify, and probably quickly start to identify over time, what are some of the attributes that it takes to be a winner? What are some of the types of companies that it does take to be successful? Mm-hmm. And you can quickly start to, discard others. But it's really fun. I mean, to your point of a question earlier about nothing phases you. I think the phasing part isn't so much on the speed of investment or the fact that we have to make decisions quickly. It's really around when shocks happen to the system, right? I mean, we're going through a little bit of that today. We obviously had some headlines last week in the crypto side with, some things that are happening. It's, the experience and knowledge really help in those periods. So you don't freeze up, and it doesn't make you, change your mentality around what you're trying to do forward, but hopefully helps you serve as a learning experience. 08, 09, I think was that for a lot of people, because up until that point, we had the 99, 2000, but it was really just a tech bubble. It didn't affect like the whole ecosystem. It just helped, one sector of the market. 08 and 09 blew up everybody. Banks were going bankrupt. We had, people concerned about the level of cash they had. We had, uncertainty around where capital was going to be and what was going to happen to the future. And it was easy for people to say, wow, the world's over and it's going to take forever to recover and it's going to be like this forever. But with experience, you realize that these things do turn around and that, generally they last somewhere between, 18 months. And, you just have to be smart around the way you deploy and the way you think about things. But for younger people, that's harder to do.
Yeah. Well, I love that you brought that up and being able to pivot and in shockwaves, because 2 years ago, we've had our biggest shockwave that I think all of us experienced, which was the pandemic. And, I'm curious as to what you maybe and your company as well, if you're open to sharing this, what you guys learned from the pandemic and how has that influenced you when deciding which company to invest in?
Yeah, it's a great question. And, if you asked me that question in March of 2020 versus today, it's clearly very different because when, the pandemic hit, it was hard to even see what the future would look like.
Mm-hmm.
It was unfathomable for any of us to think that we would be shuttered in our homes for 2 weeks, much less 2 years.
Yeah.
And we didn't know how things would operate. We have 3 kids at home and, I was trying to work at the time. My wife's a teacher and, our house looked like it was a data center somewhere. And we had screens and microphones and everything up and headsets. But what I did learn and what was amazing is, and this couldn't have happened 10 years ago, by the way, right? Mm-hmm. I mean, if 10 years ago we experienced a similar shock to the system, GDP would have gone to zero, right? We would have probably had everything shut down. Schools would have shut down. It would have been, catastrophic. Right. But fortunately, because of technology, we were able to kind of find solutions. And what happened in our space was what should have been a devastating period. And for some companies it was, right? We had, we're investors in Lime Scooters, and you can imagine that pretty much shut down. We're investors in StubHub, and that business went to practically zero because there were no events. And so for those, it was challenging. But the positive side for those businesses, and probably for all businesses, is we did 2 things. We learned that we need technology to be able to operate. That's one thing we learned from it. We also learned that we have to be able to be more efficient. And so companies that were shuttered and their revenues kind of went to zero, they figured out how they become profitable faster. And that was a beautiful thing that came out of it. The other thing we learned is that, this work from home environment or this distributed environment that we live in actually can work and that people can be productive. And it doesn't mean that you're just at home not working, but that people are actually probably overworking. I mean, I know from my experience, I, didn't account for the times I needed to travel from meeting to meeting. So I just had meetings back to back to back. And so you forgot to find, put half-hour slots in there for you to be able to relax. And so, I think that changed a lot of the mindset as well. But what we learned from it now going forward is that 2 things. Number one, tech is pervasive and no business, no individual can operate today. And whether that was going to happen regardless and only got accelerated because of COVID, I believe that. But it made me realize that, tech is here to stay and will continue to become part of it. Number 2 is that technology now is, because it's more pervasive, also has become much more global. So in the olden days, when there was a lot of capital chasing, you'd see it go into some of these frontier markets, but then when the capital pulled back, they would pull back as well. Unfortunately, I don't believe that can be the case anymore. I think that technology has to be developed in all of these emerging economies now because it's so required in their day-to-day lives that we have, a lot of systems and apps and products that are created to make life easier in the developing world that now need to be developed, that need to be created in the emerging world. And so we're going to start to see new innovation. During COVID, you had things like Peloton and you had things like, Tonal, and you had enterprise productivity tools like Slack and Zoom that all became very popular. And, people thought we would price those to the point where, it's going to be that way forever. And clearly things have turned around a little bit. But I still do believe that a lot of those tools will be needed in the hybrid world that we will live in and that we do live in. And so, we'll continue to create new opportunities. But for us, it's been about, thinking about what we need in this hybrid world to be able to operate, because I think we're going to live in there forever. Mm-hmm. And 2 is, how do we think about opportunities outside of the U.S. where a lot of these tools have not been created, but need to be created in order for these, for individuals and companies to be able to operate.
Mm-hmm. That's a really great feedback. And I love your comment when you said that 10 years ago, if this were to happen, we would have not survived. Because, I think there's that silver lining, was that it was devastating in all fronts. But then we did have technology, like Zoom was operating then, those Google Meets, these platforms that we were able to pivot because they were in existence and might not have been utilized the way that we thought we were going to be able to utilize them. So I never thought about it that way. So wow, that's amazing to think about. Kind of a follow up to the last comment you made, what are you looking forward to in the emerging technology, or, is there something that you would hope or would love to see more to be developed?
Yeah, there's a lot of things, but that we'd love to see developed. So that's a pretty loaded question, Tanya. But, there's two areas that one area I'm learning and spending more time on, one area I'm very passionate about. And so I'll start with the first one, which is just space. We've started to see a lot more capital, a lot more interest, a lot more headlines around, space and the exploration, and more importantly, probably around travel, right? But that's also helps for a lot of other inventions around, what we can do up there. And so we had just recently written a thought piece around, how space travel is going to become more, how space is going to become more than just, leisure and travel type of an activity. We've read articles about hotels going up there and, people traveling. And so that may happen one day, and I believe, but the real opportunity there, I think, is really around manufacturing. There's an environment up in space, and if we can bring the cost of travel from there back and forth cheap enough where it's almost like a flight, then, or slightly more than a flight, but then, there's some real opportunities to build manufacturing and help avoid some of these supply chain issues and whatnot, and drive some efficiencies. And so those are the types of things we're looking at. So I'm very excited to see what that frontier brings. So one area that we're spending a fair amount of time on. The second area is probably a little bit different, and maybe one that is kind of sad and needs to get addressed, but just around mental health. After what happened through COVID and what happened through, a lot of these, especially kids, losing a couple years of their instrumental parts of years of their lives. And so, how can we help them? And, part of it's being driven by obviously COVID. I do think part of it's being driven by just the pressures of social media. I always joke with everybody. My kids were about to, one went to college and the other two are applying now. And it's always a stressful time. And, you always see all of the Instagrams or TikToks of people in the colleges they get into.
Yes. Yeah.
The thing I tell my kids all the time is that's wonderful. And you should cheer those people, and you should be grateful that they had these opportunities. But remember that nobody posts the schools they didn't get into.
Yeah.
We only talk about our wins and not our losses. And so I think it's important to put it into perspective for them. So that's an area that we are spending a lot of time. It's been challenging to find great solutions, but I'm optimistic that we will, because I do believe that, it's not medicating kids. It's finding other solutions for them to be able to find ways to become grounded and to be able to find happiness and that success forward. And so something we're spending a lot of time on.
Wow. What very two different, if I may say, thoughts. You're talking manufacturing something in space. I haven't even got that far. I still have fear of flying. So to think that we can actually build structure up in space to manufacture it, it's John, clearly this is why you're in your field. I'm in mine, because I don't think that far ahead. But I love that you guys are focusing on mental health of children, because, as a mother, obviously, and you're a father, so we know the health of our children is very impactful in the future of, in generations to come. So I think a lot of people don't realize that the impact COVID did have on the children and how social skills might not all be there. And obviously we all know the results of social media and how that's kind of, impacted. And I think you and I can both agree we never grew up with this. So we would not know how to even relate to growing up with so much transparency. But that's amazing that you guys are going to be looking into that. And I hope that we find something soon, because all these children definitely can have the support. But before I wrap this up, I have a couple more questions, and, I'm really enjoying our conversation. But for those who do not know, John actually also sits as a board member for CFA Society San Francisco, one of the many board advisor roles he's had, or he is currently in. I'd love to hear from you on what you think the future of CFA Society San Francisco will look like.
Yeah, it's a good question. Maybe it will help is in explaining why I even joined the board at the time that I did. So I had moved back to San Francisco from New York, and I received my CFA years ago when I was a lot younger. We won't go into the years, but a long time ago. But it's been so instrumental and impactful to me in my life. And, whether I was heavily involved or not very involved, it always for some way seemed to help me in a path, whether it was a job or a conversation or an introduction or whatnot. And so when I came back to San Francisco, I felt like it was a time to get back, to be able to find that community. But what I noticed is that, one of the challenges of the program has always been that it's very traditional finance oriented. And now I found myself in this world of venture that was quite different. And when I'd go to meetings or when I would go and talk to the young groups, I always thought, man, it would be really great for us to be able to find a way to or meld those two universes together, because there's governance issues on one side. There's a lack of, maybe traditional diligence processes on one side that could be very well learned from the CFA program. And so my mission was really around saying, okay, especially in San Francisco, where Silicon Valley is such a big influence, can we be pioneers in helping do that? And can I be a pioneer in helping to do that? And so that was the reason why I ultimately ended up coming to join. And, it's like everything in life, it's a slow process, but I feel like we're, especially in our society, doing some really great things to meld those communities. And if anything, be able to bring, a better understanding of what the CFA and that community can provide for everybody. And we're fortunate because, one of our bigger kind of, cohorts is with Google, believe it or not, which is a tech company, which is probably very different than you would see in other parts of the country. And so slowly but surely, I think that, if I think of where the CFA is going forward, let's say the next 10, 15, 20 years, depending on how fast things can move, I think we will start to see more incorporation of newer products, newer types of investments into the curriculum. And that would be amazing.
Yeah. Well, we definitely appreciate and love having you on our board. So keep those ideas coming. And of course, before I wrap our conversation up, I really love asking this question, and I'm excited to hear what your answer is. Who influenced you and why?
Who influenced me and why? That's actually an easy one for me.
Okay.
That is my father. And the reason it's my father is, if you think about us immigrating here from a foreign country, and he was, quite older than we were, especially for those times. But he was a calm individual. And, you would have expected, you asked me earlier about what my parents thought about the decision about moving, from pre-med into economics. They came from a very open-minded background, right? They were very supportive. They were always loving. One thing I always found that both my parents were always there for us, regardless of the situation, regardless of the hour of the day, regardless of whether they had to work or they didn't have to work. It was incredible. And so through that, for whatever reason, my father and I became very close. We would, even after I graduated from school, I'd come home once a week and we'd spend time together. And we played a lot of backgammon. So we would sit and play backgammon on the court and have a glass of wine and talk about things on Sundays. And so he's someone that I learned a lot from. And maybe, he was patient enough, probably something that I'm not. He was extremely patient with me in a lot of the ways. And was always balanced. One thing that I always found was when you're young, you want to move fast. As you get older, you want to move slower because it's just a natural function. And there's something to be said about being able to balance those two. And I always remember, he would always, what's the saying, measure twice to cut once, right? And so he would always end up, overthinking before making that final decision. And I learned a lot from that, and especially as I've become a parent and now a professional, how important that is to be thoughtful around the decisions you make. But he's still someone that has definitely had a claim. I mean, just to give you a sense, he was the best man at my wedding. So we have a very close relationship. And so, I think that's the hardest thing in life is that, we have ups and downs, but how do we stay grounded? There's always going to be these situations that maybe are above and difficult for us to challenge. And there's going to be times where we may be, sitting at the bottom. And how do we always remain grounded and optimistic to go forward? And for some reason, for an individual who didn't have a father growing up, his father died when he was 3, to be able to have found that some way in his life, I always found very impressive.
Wow. Okay. One more question. Are you still on your fast mode or slow mode in your life?
It's a good question. I'm definitely slowing down, but you wouldn't know it by my calendar, put it that way. I mean, I think I've been home. So If you ask my wife, it's probably less. But I think I've been home 2 days, no more than 2 days a week for the last 3 months, from traveling and trying to go do stuff. So it's been very, very busy. But I don't think I'm ready to slow down yet, but I'm going to go as fast as my body lets me, put it that way.
Awesome. Well, you still got a lot to do from the sounds of it. So you are not slowing down anytime soon for sure. All right, John. Well, thank you. Thank you so much for joining me. I had a wonderful time having our conversation and I could probably go on and on.
Thank you, Tanya. No, really appreciate it and appreciate you having me on and look forward to continuing and following up on our conversations. Thanks again.
Excellent. Thank you so much.
Thank you for listening to this month's episode of the CFA Society San Francisco podcast. We hope you enjoyed the engaging discussion. Please stay tuned for more episodes of this podcast, featured every fourth Tuesday in our weekly newsletters and through the CFA Society San Francisco podcast channel, available through most major podcast apps.